Hey, how's your Monday, guys?
Hey, thanks a lot there, Scott. Steve, what is
Yep.
happening?
It's a Monday, just like Scott said.
Yeah, hey, you can call me Andy if you'd like to. You
I'm
can
gonna
call
call
me
you. I'm gonna
Ray,
call you
you can call me
Mr.
Jay.
Lindelof. I'm gonna pay some respect.
Nope, Andy will not be around till Thursday, but come join his webinar. It's always a good show, as well as Steve taking over tomorrow. In any case, welcome to another edition of the Office Hours. I'm your host, Jamie, and got my trusty wingman Steve in here riding shotgun. And wow, October's almost halfway over. Where does the time go? Well, when you're sitting in front of the monitors all day, it tends to pass pretty quickly. Before we get on to the good stuff here, just want to take a quick moment, get the disclaimer done here, and just make sure everybody in attendance is aware of the fact that all the information that myself and Steve and Andy share with you guys is for educational purposes only. If you do need investment advice or when to buy and sell securities, all that good stuff, please seek out a registered investment advisor or someone else like a Series 7 licensed stockbroker that can legally dispense information of that nature to you. Once again, everything that we share with you here in these webinars is for educational purposes only. Always like to take, where did my mouse go? There we go. Always like to take a little bit of time at the top of the hour here just to give the new people in attendance an idea of the community that we fostered around the award-winning technology known as TI Pro. Um, Upper left-hand corner, Barry's trading room. Always a good place to start. Or if you don't start there, it's always a good place to gravitate to. Bottom line, you need to be in there. Barry does a fantastic job at moderating a crowd anywhere between, could be 4, could be 600 people in that trading room, depending on the day. Barry does a fantastic job of moderating, and not only that, but showcasing his trading style and the way that he uses the TI technology as well. Interesting little thing I'll share with you guys here. Got a buddy that's been trading, man, as long as I have. He's a little bit younger than me, but just like every trader, he's had his ups and downs, and you know, throughout the past 20 years, he was looking for a place to go. He's back in the trading game. I'm like, look, go spend time in Barry's trading room. And this guy, like I said, he's been in the business as long as I have. He's probably been in there about 2 weeks, and he's like, man, I wish I would have gotten in there sooner because I really am getting some good value out of the room. So if you haven't been taking advantage of the trading room, don't short sell yourself. Get in there, be a part of that community. Of course, with the 5 o'clock Eastern webinars, you get myself and Steve on Mondays. Steve's going to take the steering wheel for Tuesdays with the trade of the week, and Andy's going to ride shotgun with him. Change it up just a little bit on Wednesday. You don't see myself, Steve, or Andy. You get Dan Merkin and Brad Williams, our chief executive officer and the founder of Trade Ideas, Dan, and our chief technical officer, Brad, giving you a peek at what's coming down the developmental pipeline, putting their own spin on trading opportunities. So always good with those guys on Wednesdays. And then Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I'm going to ride shotgun with him. So that's what we have going Monday through Thursday, 5 p.m. start times. Friday rolls around, we like to change it up, and the ever popular, ever growing Friday support webinar kicking off at 11 a.m. Eastern every Friday. The cool part about the Friday support session is nothing is off limits. It's there for you to get any type of question TI related answered, whether it's advanced fabrication strategies, back testing, auto trading questions, or very basic stuff. The cool thing about it is you typically have myself, Andy, Steve, and Sean in there, all putting our heads together, answering your questions and helping you out in there. Uh, in addition, we've also got the TI University beginner 101, 201, 301, and 401. These run Monday through Thursday. These all have a 12 p.m. Eastern start time. Now on these, whereas the 5 p.m. Eastern webinars, we constantly try to bring new things to you guys, keep you on the cutting edge. The content here is going to remain static. So 101 is always going to have the same content. 201, always the same content. We do recommend, if you can, to attend these in a live, the live editions, because you get to answer, or you get your questions answered by the trainer at the time, if you do have questions. Now, I know that some of you have pesky things like jobs that might get in the way. So if you're unable to attend these in a live format, we've got all of them recorded on our Trade Ideas YouTube channel. So you can watch those as many times as you'd like, since the content remains the same. It's pretty much all the same. If you have any questions after you watch those videos, you for any remaining questions that you might have. So once again, these are Monday through Thursday, all starting at 12 p.m. Eastern. I always like to give a little glimpse of how our user base has increased since we introduced the very first AI module back in 2016. And you can see from the two big bars here, 2017 and 18, and who knows, we'll just have to see what old 2019 looks like once the year's done. In addition to that, Brokerage Plus, our add-on to Interactive Brokers, which allows you to trade manually or use the Holly strategies to do some automation, or even automate the strategies that you fabricate yourself with our backtester. So whether it's manual, automation, Holly, we can clearly see here that people are using it, not only in the demo mode, but in the live orders filled in the blue bars down here, slowly increasing month over month since we've released it. So that just lets us know that people like it. It's a great trading interface. If you haven't explored Brokerage Plus, get on in there and see what it's all about. Of course, it's going to be a little bit easier to do that once we release our paper trading mode, which is getting very close to release, ferreting out the last batch of bugs, and keep our fingers crossed. Hopefully, within the next 2 weeks, we could see the paper module of Brokerage Plus released to all the users. And that's going to be a pretty big deal. We're going to talk about it, and we're going to show it off a little bit later on in the session. All right, and here we are with today's itinerary. Well, that's more like a travel schedule, but today's schedule. Market recap looks very similar to what we were looking at last Monday. We had a gap down. Guess what? We filled it, and then we kind of went sideways for a while. So Steve, if you're ready, I'll go ahead and kick it over to you. We can talk about the overall indices, what happened today, and then get on to the meat of the presentation here.
Yeah, I am ready. So let me grab the screen. All right, so I've got a big old daily chart of the spiders here, and definitely have some comments. This is many ways to look at this. These are the camel humps that Andy keeps talking about. Okay, that's probably one way to look at it. Speaking of good doodles over charts, when Jeff Mackey comes to give his presentation at the Trade Ideas Summit, you're going to see some real skill in the overlaying of the doodling in the daily charts. Just a good tease there, good stuff. But looking at here, it's still to be determined. Is this the biggest double top of all, or are we really going to kind of resolve and move higher? I want to go back in time a little bit and remind you guys that I don't mind. I'll call myself a flip-flopper, and I don't mind calling it a flip-flopper. And I'll tell you what I mean. Back here, when the price was being supported by the 10 and the 20, I said, I don't see any bear case to be made. And then all of a sudden, it all broke right here. And then we had this crazy, on average, was holding the price down. I started to say, I'm starting to get bearish. I'm a little concerned that the price action can't get back above these declining critical technical moving averages. And then all of a sudden, they did. Okay, I'm back to here, back to, wow, geez, we might be really close to maybe making some new highs. I mean, that was, and all of a sudden the price action said, whoa, not so fast again. Consolidation, and then blam, we broke down. I said, okay, last week I'm starting to just have a hard time making a bull case again. So, I mean, you see this vicious cycle we go through. I look at that wick right there and inability to close below these key averages. So along comes Friday, and we get, I'll tentatively call it kind of a minor pro gap. Typically a pro gap is a gap up in the opposite direction after a long prolonged trend, either downward and a gap upwards, kind of really catching everybody by surprise. Well, at least 3 weeks of volatility and data here, and myself included, saying, well, I don't know what's going to happen. This could get pretty scary. We get kind of a moderate pro gap up on Friday. Well, interestingly enough, it could not hold its pro gap. Let's a bit more perspective. All right, so there's our pro gap up. Markets were eager to get some news out, and I think White House was eager to at least let the markets chew on something before the weekend, and they did in fact do that. A little bit of a news hiccup here midday, and then kind of closing back, not closing back midday, getting back to highs near midday, but a horrible, rotten close, showing the a lot of wishy-washiness going back into the close, which translated into that giant wick. And isn't it funny to know? I know Jamie and the market opens right here at 290. Back and forth, highs to lows, and finds a way to close right back at the same spot. It's like, why even open and trade them? But they do. And what do you know? Today, the same thing. But let's look at what today is. Let's talk about today. Yes, Friday was a surprise to me, and today was a bit. Let's not get ahead of ourselves. Let me bring this up. Friday was a surprise to me, and I know Jamie's going to see this also. Stocks. Let me phrase that. Some of the shorts that I have in my swing, because I was putting my money where my mouth was back here, they're not moving higher. They don't look like these indexes we're going to look at here. The individual names are hanging lower. I mean, I'm sure Twitter, and short a new on Facebook last week, this big washout wick, but it didn't really go much higher. But the bigger one, Twitter, didn't really move like the rest of the market did. That one's kind of an interesting tell to me. So back to today, which curiously we also have another little silly doji where we basically opened up, traded, bounced around, and then closed right where we opened. Now today, look at the volume down here. This is telling that this is Columbus Day, and banks and the bond markets and mail, all that stuff is closed. And typically on those kind of days, you don't have a whole lot of movement, especially with the bonds and the banks being closed. So what the bulls are looking to do here, and this is where we need to go. This is what's going to happen now. This 20 period is going to start to 50 period. A good 2 or 3 days of just trying to hold that gap as best as possible can be very productive. I will give them that. But let's see if that can happen. So the good side, the good news is the indexes are, at least with today's data, maybe probably the same, trying to hold that minor pro gap that I just mentioned that we had on Friday. So no damage was really done today. This is kind of expected. That wick is kind of curious. The last 2 days is also kind of weird. But as long as the price action kind of stays in here and doesn't give back too much of this gap, I think that could be very constructive. So we'll see what happens. We will see what happens. Again, we're still in a news-driven environment. Anything can happen at any time. But some of the key takeaways are here is that, yeah, there's been a case to be made to be wishy-washy bullish, kind of on the bearish side. Okay, we're back to on the bullish side. Oh, geez, now we're back under pressure again. Well, let's see how this resolves, but a couple of good days of sideways action would be very constructive for the bulls. And the other takeaway is my stocks aren't bouncing up higher and gapping like these are. The stuff I was short just kind of stayed where it was. Looking at the NASDAQ in the same vein, the last 2 days at least aren't dojiing like the S&Ps are. They're putting a little bit of green in there, closing a little bit higher than where they actually opened, but still should not give back any of that gap. Maybe some of these averages, they're a bit above them. It's going to take a little bit of work, but maybe some of these averages might come up here pretty quickly. Maybe we get a spike down by buyers on the open. We shall see. So what the bulls don't want to see is another candle going back down here and closing on lows and getting back in here into this mess. We don't want that. This feels like this is the time. If we're going to do something, this is the time. Meaning if we're going to do something like turn this into a kind of a cup and handle type move where the higher lows are digging in, creating higher base camps and moving higher off those base camps, then so be it. But if this fails again, I think in the bigger picture, we got to just stay, you know, what the heck is going on here? We've had a lot of time to try and move out of this range. We can kind of see this range developing for the most part right there. It's been going on since June. And that big wedge onto the Dow by way of the diamonds. Same story, big pro gap up on Friday, long wick, couldn't close anywhere near highs yesterday, Friday, or today, but a little bit of green color. We're just going to wait and see if the sideways action can show up. The more sideways the stock action can go the next couple of days, the more constructive that will be for the bulls. And lastly, the IWM, still just a hot mess for the last year. But I think we can all agree there's a range here, and we're right in the middle of that range. So not only that, the IWM is not like the others. The others, as you recall, have gapped up and kind of dojied the last couple of days. Well, the IWM respectively is not doing that. It's still down here in this hot mess of moving averages. So that's something to keep an eye on as well. Other than that, we'll talk about more of the trade of the week last week, which, construction that happened coming into last week, and then look at the grinding 2 weeks base that was kind of built down here. It's not a process. I'm sorry, it's not an event, it's a process. When you have a big correction like that, it's not a pullback, it's not a buy the dip, it's a get out of the way and let the correction. We're 3 tests of these areas down here, and then the price started to drift back higher. And this is what I'm talking about right here. Breaking above, moving sideways, 3 good days of sideways action, and then Roku really gave a nice gift. Even though the market was a little crazy, relatively speaking, Roku already had its pain. So that's one of the reasons we picked Roku, and it worked pretty nicely last week. I'll talk more about that, but there's another last item to leave you with. I talk a lot about a day and a half when you get your movement. When moving day does occur, you get a day and a half of movement. Well, here's day 1 right there, and day 2 was short-lived, right on the open. So nobody saw that coming, but and have your set hand on the sell button, we start to see a lot of green on day 2, because usually that's when profit taking starts. But we will dig more into that tomorrow and talk more about that tomorrow. And that's it. That's all I got, Mr. Jamie, Mr. Lindloff.
Thank you kindly, Steve. Always good. Let me grab the screen back here. My desktop.
Yep.
Okay, all right, very interesting how things played out today. Of course, we could look at the SPY here, right behind here, and go, hey, it was kind of a boring day. But first, let's talk about expectations before the majority of this day played out. We're going to be talking about what the CC, my compare count readings that I like to look at after the first 15 minutes were, after this third 5-minute candle. So just a quick little recap here. What I look for is a bias of 55%, one way or the other, to try to figure out if there might be any follow through to that direction. Now look what we had today, 51%. I mean, might as well have been 50-50, just 1% away, but it was green, all right? Now, when I see readings under 55%, typically I tell myself, okay, there's gonna be some long opportunity, there's gonna be some short opportunity, but guess what? It's not gonna be long-lived. Of course, there are always stocks that might run up or down for the day, but as a effect from the market, well, a little bit of this, a little bit of that, a little bit of upside movement, a little bit of downside movement, but certainly not a trending day. And boy, things played out pretty much to the T today. Not only when we look at the market here, and I'm in 5-minute candles today just because, well, that's what I'm in the mood for. We had our low put in here, we came back up here and put in our highs, and then what did we do for the majority of the day? We stayed in that range, right? And even, not vacillating very wildly. I mean, could level a house right there. But the bottom line is, this little guy gave me some pretty decent expectations on how the day would play out. And of course, this window is only looking at companies hitting highs and lows in that first 15 minutes with a market cap of 4 billion or higher. So it is the higher capped stocks that this guy is keeping count of. Now, we're going to talk about how that played out. We're going to start 51%, anything goes. Now, let's just talk a little bit about Holly. We're going to come back to these expectations when we talk about exploring in paper mode and bringing Brokerage Plus over, and I'll show you guys what I did with Brokerage Plus today. It's very interesting. But first, let's just go ahead and get Holly out of the way and talk about how she performed today. Now, once again, keeping in mind what we saw on the counts, 51%, barely bullish here. Now, what did Holly spit out today? Well, we had a total of 11 trades, as we can see over here from the channel bar, between all the modules, 4, 5, and 2 respectively, for a total of 11. We can see all 11 trades right here. Now, what we typically do is, see if there's any risk-off, risk-on spread to be had today, and there was, as there typically is, even on a day where Holly doesn't necessarily knock it out of the park. And if we tally all these numbers up over here, 30, after we take this away from this, and about a point and a half, 150 bucks, trading 100 share lots is what Holly was up on 7 trades, which really isn't that bad, especially on a day like today. But we can see here, the module that made the most money, full risk mode. Full risk mode up here on Holly 1.0, even though that module was down a smidge, and then risk on over here in Holly Neo. So just to recap real quick here, risk off is Holly playing in strict rule mode, getting out whenever stop loss, profit target, or timed hold is up, or exercising one of her audibles, reduce risk or profit save. Risk on is, well, if we just stayed in the trade after Holly was making the exit, that's what the value is going to be. And then full risk is just staying in the trade regardless of whether or not Holly gets stopped out or not, which a lot of the times we don't see full risk win the day, but today was one of those days. And the only risk on, risk off profit there was to be had is after these things stopped out, because we can see over here, risk off exit, 1, 2, 3, 4 stop hits out of 7, which is a pretty, or excuse me, out of 11. That's a pretty big ratio of stocks that Holly puts out that get stopped out. Typically, we don't see that high number of stop outs, but once again, after seeing those compare count readings and knowing that we're getting a idea, we never know for certain, that it was going to be a slippery slope for the day. Seeing that many stop outs doesn't surprise me. Now, let's take a peek at these that are showing some spread between risk off, when Holly got stopped out, and full risk mode. This guy is just, I mean, wow. Okay, RVNC, here we go. Let me get that right perfectly. Okay, hopefully everybody can see this. Not a bad entry signal up here. Everything looks rosy for the time being. We got a nice little, we've got these opening wide bars here, and then we slowly tighten up, leading into the signal bar, which makes people typically feel pretty trade. We get a little red candle, start flirting with the 10 period, even though I'm not on the 15-minute version, still adhering to it pretty quick. Bottom line, just not a whole lot of room in here between the 1268 and the 1238 stop, a 30-cent wiggle, even though that's a $12 stock. I mean, things will do that in a microsecond. But the bottom line is this. Watching these compare count windows, what do we, how do we temper our expectations? It's going to be one of those days, slippery slope. Now, I've talked about this many times in prior office hours webinars about how sometimes we can see Holly making reduced risk and profit saves, closing out trades early, and a lot of the times we'll get similar action, but we won't be down to the stop out. And sometimes those reduced risk and profit saves can alert us to a good entry, meaning we can get a better price, take less risk, and still be in the same trade. Well, this is pretty much the same thing, except instead of reduced risk or profit save, we're seeing stop hits come into the play, which the methodology is the same. On a day like today, maybe you were in this one, maybe you weren't. But let's say you see Holly get stopped out here. I tell you what, let me just go to 15-minute bars here and see if we can have a little bit better. Okay, not do so much scrolling there. Holly gets the buy here. We come down here, we get stopped out, and you see Holly's screen flash. She goes stop hit. Okay. Well, take note of that candle. We got a nice little bottoming tail there, just barely getting through that stop. So then we see the next candle form, and we could easily say, okay, well, just like in reduced risk or profit save, I still might be able to get a better price than Holly. We've already went down there and tickled the stop. It's a slippery day, but still adhering, just barely wick through the 10 period. Now we are on the 15-minute candle. So it's the same methodology. We see the AI getting stopped out. We're not in the trade. We pull this back up. We're like, hey, that doesn't look like such a bad deal. We see the wick here, gives us a little bit of confidence. Sellers took control, can keep it down there, bouncing right off that 10 period, and then whammy, right back up. So anywhere in this area right here, we could have gotten a better price than Holly did. All right, that's first and foremost. Let's take a look at how the volume was playing out in RVNC today. We can see it finished with a 3.41 relative volume, which is pretty strong heading into close or with the day behind us. So volume was high pretty much all day on this. You know, this plays out time and time again, whether it's a Holly trade or one of the trades that we make manually. How many times have you barely been stopped out only to see it go? But in this case, if you're not in the trade with Holly, this is all after the fact. We can get a better price here, and then my eyes are immediately drawn to what happens shortly after that. Prior high right here, close that bar, boom. Not only could we, with statistical probability behind it, but we've got that auxiliary pattern playing out shortly after the area of interest here. So we got a right after that. We'll have empty for the rest of the day. So a lot of good attributes behind this trade, even though it was a stop out. That's what we have the AI for. Not only can we take advantage of Holly's misfortune, just like Steve and Andy and I used to do when we had to actually go to a physical trading office and sit there because technology wasn't caught up yet. But instead of Holly, it was actual people bitching about getting stopped out of a trade. And then we pull it up and go, hey, well, looks pretty good now. So you can apply that same methodology to Holly, all right? And by watching Holly, we can get good trades on the fly. We can take advantage of when she gets stopped out, and we can also sometimes get good entries when she's closing out trades early with reduced risk and profit save. So all in all, even though it was a stop out, man, if you're paying attention and you're watching where these things wick and seeing that, you know, that wick barely got the stop out, adhering to the 10 period, you know, there's still opportunity in plays that Holly even gets stopped out of. So pretty big spread there between -30 and 133, which, by the way, her numbers over here. We're usually I've been on just one share because I want to see the exact amount, but it is on 100 shares per trade today. So not a bad play from RVNC there. And then we've got Yuma, which looks very similar, right? Once again, a stop hit, 26.75 was the stop out, entry line here, small dollar stock here. What do we have there? Not quite 30 cents, about 27 cents on the stop. Sure enough, get a little sideways action here for 15 minutes after the entry, and then stop out barely gets triggered. Wick touching nicely on the 10 period and then going back up. So once this candle is closed, what do we have there? We got that nice wick, make us feel nice and comfortable. And anywhere between here and the blue line is an opportunity to get in there. You could have even kept the same stop loss or loosened it up just a little bit, but still an opportunity to get a better price than Holly. And then we get positive movement. Now this one exhibiting the same thing, little auxiliary pattern playing out, secondary here on the intraday. Not quite as much lift as we saw in RVNC, but pretty much the same methodology. Stay strong for the remainder of the day, adhering to the 10 period, start to break down a little bit in the last hour, hour and a half, and getting flirty with the 10 period moving average. So a little bit different of a blotter than we're used to seeing from Holly. Usually we're keying on the reduced risk and the profit save exits to try to glean a little bit of risk off and risk on. And today not necessarily the case. We had to go to full risk to see any type of spread on a relatively kind of a very light day for Holly, only spitting out 11 trades. So a very light day for Holly, but nonetheless, still a little bit of risk off, risk on opportunity in there. So before we cruise on to the next topic, any questions about risk off, risk on, the difference between them, or if I need to rehash anything here before we move on? And Brian, I see your question there. We're tracking Holly 1.0's performance, and you can go to our website, scroll down to the bottom, look at our latest blog post. The performance for Holly 1.0 is usually posted in graph form there. And we hopefully, by the end of the year, we're going to be able to track all 3 modules, or what we're moving to is just a consolidated Holly, which is what we're seeing in the all trades blotter here, but it's still broken up into separate modules over here, which I would think that in the future we're going to gravitate to just one, treating it as all as one Holly and tracking performance from that point on. But right now, only 1.0 is being tracked and published. So hopefully that makes sense. All right, so moving right along here. As we all know, Holly had a long bias, of course, only 2 short trades in there, which is par for the course. Now, let's talk about Brokerage Plus and hopefully what's coming up pretty soon here to be released, paper trading module, all right? Which, by the way, I'll just go ahead and pull my Brokerage Plus over here. Paper trading can be done in manual mode, just you clicking on things and hitting buy or sell, or we can load strategies in here as well and see what plays out from the statistical standpoint. But what we're going to talk about now, and this whole blotter full of positions here, is really the power of statistics. Now, throughout the past year, I haven't really spent a whole lot of time examining these types of data sets for the specific reason that it's very difficult to run a model of this nature consistently, meaning day in, day out. The problem was we would have a hard time overcoming commissions. And don't forget, it's not just commissions that we had to overcome, also slippage, which is the difference between when the alert comes out and when we actually act on it, whether that be manually or in an automated process. Even in an automated process, there still is slippage. So the bottom line is, running automated strategies or statistical models where we're in a lot of trades, we have to beat commission and we have to beat the slippage. But as you all know, the big hullabaloo as of late is everybody's moving to commission-free trading. Now, IB has yet to go, okay, everything's free. Because just to recap here, they're the ones that started the party, but they are not yet included. And anything that goes through Brokerage Plus, we're going through their API. In the meantime, all the big boys, E-Trade, Schwab, recently Fidelity, Ameritrade, are all just like, okay, everything's free. So one would think that eventually IB, hopefully sooner than later, will also make that change. Of course, there's no guarantee yet. From our perspective here at Trade Ideas, we would hope that they would follow suit as well, or else it might be time to look to another major firm to port B plus over to. But we'll see what happens. But having said that, with commissions going away, well, it makes this type of trading a lot more feasible, because with 0 commissions, all we have to worry about is overcoming slippage. So it's a pretty big deal. So what I want to share with you guys here today is simply the power of the statistical model. Now, what you see right here are all the trades that I initiated after the first 15 minutes of the market. And if we sort by time over here, we can see the first one was initiated 3 seconds after that 15-minute mark. And you're thinking, wonder why I waited 15 minutes to start. Well, you probably guessed already. That was so I could wait and see what my compare count readings were. So had everything loaded up, and I'll just give you a peek at what that looks like over here in the strategies tab. All of these trades were generated from my bread and butter high-low tickers that I like to watch for manual entries. Turbo breaks up and turbo breaks down. Now, let's go back to the compare count readings one more time. What was my takeaway from this after the first 15 minutes? Well, it was anything's on the table. There's going to be longs, there's going to be shorts. We could also say, or what I was thinking this morning is, there's not going to be any follow through. There's going to be in the money, and then there's going to be back to zero, or maybe even out of the money. Okay. So my theory this morning was, okay, with these crazy, well, you can have high crazy, you can have low crazy. These are on the low crazy side. With these abysmal, I could say, compare count readings, here's what I'm going to do. I'm going to fade the longs. I'm going to go opposite. So anything coming out of turbo brakes longs, I'm going to short it. And anything coming out of turbo brakes down, I'm not going to short it. I'm going to buy it. I'm going to do the opposite based on these abysmal compare count readings and the theory going that there's going to be a lot of just back and forth. And the results were very interesting. So what I did is I'll pop into my trading instructions here. So I allowed each strategy to take 15 positions, as we can see right here, just using a limit order plus a delta. Of course, this is demo mode, so you're always going to get filled. But just while we're on topic here, for live trading, this is also a very good way to go too. We're not running a market because we don't want to eat big spreads and take all that price beating on market. We're going to go limit with an offset of a -8 delta. And all that means is if it's a long and the signal came in at 10 bucks, it's going to put my bid to buy out there at 10.08. If the spread's less than 8 cents, if it's 2 or 3 cents, I automatically hit the offer. I'm filled. If the spread's bigger than 8 cents, then I'm going to be hopefully high bid or somewhere close to there and hopefully get my fill. But just to explain a little bit about what's going on here. Now, on these, I didn't run with any stop losses or profit targets because I wanted to get an idea of whether or not my theory about the price action was going to be accurate. And keep in mind, this is cool. This is the cool thing about enabling paper mode, is because there's a big difference between seeing a back test and going, oh, the back test looks really good. I can go back and review all the trades. But being able to visualize the data in real time from a strategy where the back test looks decent and actually seeing how things ebb and flow, that's a whole nother level of consciousness that you're going to get, and a whole different level of understanding, so that in the future when these types of days unfold, whether it's a low compare count like this or a high compare count where we only run longs or we only run the shorts, it's very eye-opening. So having said that, let's take a look at the equity curve here. Now this is how things ended up after everything was said and done. Going short on the longs and going long on the shorts, this is how everything ended up. 5 minutes to the close, I had it close everything out up 42 bucks, which isn't anything to write home about unless you're trading a zero commission model. Then that's free and clear. Now, what I will say about this that a lot of people might be overlooking, there is that thing called the SEC tax, which is never going to go away. So we might have free commission trading, but everybody still has to pay the little SEC tax, which is implemented anytime you sell a stock, whether you made money or lost money on it. But hopefully that's going to be negligible compared to commissions. So even more interesting is how things played out on the equity curve. And you can see right here on the open, we briefly got up and then boom, 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 just down, 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 slowly but surely. And keep in mind, the whole time this is happening, it's not like we're running up or running down a whole lot. I mean, this was the SPY in the 15-minute candles for the entire day, right? So it's not like things were ripping up and ripping down. It was just the slow grind all day. And slowly but surely, back to profitability. And this is a little skewed right here, so we can't see. We can see almost down 200 here. And by the way, my position sizing here, just so everybody gets an idea, we were doing $2,000 per trade, and the system would simply get as many shares as we could get with a $2,000 entry. And we can see all the share, well, we could see all the share sizes here, but they're all zeroed out now. But that's how the position sizing was working. But then slowly, drawdown gets less, back to break even. And up here, we could have exited for right at 200 bucks. I think it got up to 189, 195-ish is where it peaked out. So slowly but surely over time, they're at about 4, almost 5 times larger than what we see holding into the close. So that is the power of statistics, right? Now keep in mind, had I run the strategies in those, and I bought the ones that are typically shorts, but flip this around, if I would have went long the longs and shorted the shorts, we would have gotten up quicker and then experienced the drawdown later in the day, right? All while the market was doing this, okay? So in essence, the bottom line, whether you shorted the longs, went long the longs, or did vice versa, the theory about what the market might do based on the compare count readings was pretty accurate, okay? Because we all know that, hey, every trade that you see could have won it. Well, this stock went down and it went up, could have made money on the short and the long. And what we're seeing right here is a perfect testament to that, especially on a day where the market didn't really do a whole lot in the range that we see here. So, you know, the reason I'm sharing this with you guys is because once we release this, this is what you need to be doing, right? Take your ideas, put them into Brokerage Plus and see how the data flows, all right? And keep in mind, I'm just one day into this. I'm gonna be doing this for the remainder of the week and then making my adjustments on how to treat the strategies based on what the compare count reading come next Monday. I'll have even more information to share about tracking data in this capacity. But all in all, very interesting day to see how things played out. And, you know, don't get me wrong, earlier in the day, I'm like, well, so much for this theory. You know, we're already getting killed and, you know, there's no way we're going to get back up here and be able to exit for a potential profit. But, you know, getting all the way back up here to almost 200 bucks, I was like, okay, well, now things look like they're making sense, right? So it just goes to show you that there wasn't a whole lot of follow through today, and whether you were long or short, at some point during the day, there was a chance to exit for a profit. All right, let's see, a couple of questions rolling in here. What is your reasoning? Okay, well, Waleed, hopefully with what I said about the compare counts, that kind of summed up the reasoning here of why I faded the longs and why I bought the shorts. And if I need to go into any more detail or rehash something, go ahead and let me know. Yes, and Jeff, all of these positions were created, they started piling in 15 minutes after the open because opens at 8:30 and then 8:49. So basically all of these positions were initiated in a 4 to 5 minute period, and then it didn't take any more because I only allowed for 15 shorts and 15 longs. And I didn't let the strategy pile into any more than 15 longs and 15 shorts. And you can see right here, total trades, 30. So we had exactly 15 longs. All right, so that's it for Brokerage Plus and a statistical experiment that we did today. But, you know, just keep in mind when we do release this, it's going to be a great learning tool. Not only can we day trade and, you know, hit our one-off trades that might look interesting, but it's going to allow us to put these statistical models in play and really feel the ebb and flow based on what the market is doing. And hopefully, maybe IB will relent sooner than later, but we'll keep waiting and keeping you guys informed as well. All right, moving right along here. We did have some really nice individual stocks on some intraday range breaks, and boy, when we take a peek at these, it's almost like, well, we can definitely see the same algorithms and control here. And then I have some interesting stuff I want to share with you guys on inside days as well, but if we don't get to that, maybe we can save it for next time. It's more related to swing trading. But first and foremost, let's take a look at some of the range breaks that were present today. I would say the majority of the ones that were easier to find today were definitely to the downside. Why is that? Don't really know. A lot of the ones on the upside were a lot more stretched out, but some of the higher quality ones that I did find were things like this. Procter & Gamble. Everybody knows who they are. Thick liquid stock, typically not so spready. Here we go with the opening bar right here. 1, 2, 3, 4, right at that hour ORB. We got a little penetration there with some pretty stout volume on the 1 minute time frame. Of course, Procter & Gamble finishing with a relative volume of 1.37 today. So here we go with the break right here at 120.97. High, that 15-minute candle would be our risk. Tell you what, I marked these up in 5 minutes, so I guess I better pop back over there. Okay. So same thing, just a few more bars to contend with here. Clearly, we can see that range being broken there. 5, 10, 15, risk is back up here, and a nice profit region for the Procter & Gamble short right here. So we have risk right here. We could probably cram that risk area into this area right here, probably 3, maybe even 4 times. That's really good risk to reward, especially on a higher cap stock like Procter & Gamble. I tell you what, unless it's just necessary, I'm so used to being on 15 minutes these days. Just wanted to point out the 10 period, boom, way underneath the 10 period for most of that move. Get a little flirty right here, get another push down. So, you know, from here to here, nice profit potential in Procter & Gamble. Now, the next one, IPGP, not so obvious here because we got this wick kind of ruining the party right here, but we have to include it because that is the actual range break. But I was watching 5-minute candles most of the day, so I'm just going to pop back over. A lot more obvious here. All right, we get the pop up, slowly wedging back down. We get about 15 minutes of do nothing right here. And then as soon as this level right here is penetrated, boom, we get a nice little follow through here and then a bounce. But keep in mind, we make the entry right here. We look back 15 minutes on the smaller 5-minute candles, 5, 10, 15. That is a really tight risk area right there, and it never gravitated back up. And just like the other ones, we could probably fit that risk area 3, 4 times in there before this one finally bounced off the bottom here. But some pretty nice risk to reward ratio in IPGP as well. And lastly, we had another one in Jack. And out of all the ones that I looked at today, these are the only ones that set up nicely. It seems like that opening wide range bar was the telegraph for a lot of these things today, because we get the spike down, we capitulate back up a little bit, slowly gravitate back down to that wick. Nice clean little entry area right here as we break that low. Nice small risk area. I thought I'd mark my other ones up as well. I guess my text decided to stick on this one. Don't know why I didn't on the other ones. But not only could we visually fit this in here numerous times, but that was a nice little 1.9% plummet that we had in good old Jack in the Box today. And Steve, looking at the daily over here on Jack, might be an interesting one to keep an eye on for tomorrow, because, you know, just down into this little level of what could be support right here. And maybe Jack wants to go revisit highs again. So that's definitely going to be on my radar tomorrow as well.
Yeah.
All right, and I think that is just about it, ladies and gentlemen. I got a little bit of time here real quick. So I do want to talk about the daily inside candle top list that has been pointing out some pretty good plays that could result in good swing trades here. Now, I'm going to backtrack a few days, because this one's spitting out some pretty interesting stuff for what I perceive to be interesting swing trade candidates. Now, look at this area back here on RH. Of course, this one showed up on the inside candle 1, 2, 3, 4, 5 days ago. All right, at the close here, or during the session here, because what did we have? We had RH getting some moxie and popping up to all-time highs here, time highs. And then the next day, we got a fall below it, but it was an inside day. All right, with a nice little bottoming wick there, you know, kind of jiving with the 10 period right there. And so I told myself, okay, I'm going to watch RH for a possible swing trade when it goes back through these levels here. And of course, we can see inside day, and then 1, 2, 3, 4 days, we're back to all-time highs. Would have been a really nice swing trade there. And with these types of candles right here, what I'm thinking is using the bottom of those doji type inside days there if they materialize, right? So not everything on these lists, they're all going to be inside days, but they're all not going to look, you know, like dojis or be in proximity to all-time highs. You know, SAP looking kind of interesting there. I don't really like that topping wick, but it is an inside day. It's probably a little too tight to do anything with. But the process is this. We're going to start, you know, what I've started doing is scrolling through all of these inside days and then picking out the ones that look conducive, right? All right, so here we have SWKS. Crunch up the daily a little bit here. We still got a little bit of room before we get to all-time highs, but that's kind of the nature of the beast here. They're not going to be at all-time highs. They might be close, or they might have popped through and taken a little leg back down. But when we see inside days like this, we can potentially use the bottoms of these wicks. Tomorrow, if it opens up strong and starts trending up, could be a way to get into a potential swing trade and get back to all-time highs while using fairly smaller risk levels based on a doji-ish type inside day. Let's see, what was some of the ones that I picked out earlier? Here's one on VAC. We looked at SWKS and not so much on ET. Okay, this guy did not end up on a inside day. But basically what I'm going to do is start scrolling through all these inside days, looking for ones that look very similar to the way RH played out. All right, you know, we get a nice pop to highs, we come back down, set an inside day, and then we start to trend up. Well, that can act as a very good stop order in case you're wrong and you get rolled on here. So I'm going to drop this daily inside candle top list into the chat area in case anybody would like to start watching it. But in my opinion, just another way to look for potential good swing trade candidates. All right, so I've dropped that into the chat. For anybody that wants to use it, you can grab that cloud link here. And I see a couple of questions coming in here. Let me address these before I bring Scott in here to walk us out. Yeah, the Ashraf, the turbo brakes up and down. I'll gladly drop it into the chat, but keep in mind, any of the windows that you see me showcasing, as well as Steve and Andy and Sean, we're not necessarily Sean, he doesn't do these webinars, but myself and Andy and Steve, you can always go over here and click on channel 4. And once this populates, it's taking its sweet time. Wow. Okay. So you can see we've got turbo brakes up and down. So you can easily right click and save these to your cloud. And that way you have them, respawn them in your layout, find a place for them, and you'll have these windows. So here you can get turbo brakes up and down, and then you can get the modified versions, which are looking for the turbo brakes up with no resistance or support based on the fact that they're at all-time lows or all-time highs. But these two up here are the regular versions. And lastly here, is your interface the new beta version, or is it different than what you have? Pretty much Brokerage Plus is going to look the same. It's just going to have new functionality as far as the paper trading goes once we do release that. All right, looks like those are all the questions that we have. So Scott, if you're ready to walk us out, let everybody know how they can save a little bit of money on an upgrade or a new subscription.
Yeah, sounds good.
So ready for you.
We have that summit coming up towards the end of the month. There's still a couple tickets left for the live show, so if you can make it to San Diego and you're in SoCal, snag those. Just use that code on your screen. Go to tradeideas.com/summit. And do just go to those pages to check out who we have speaking. It's a pretty impressive list. If you want to watch online on the day and then get links to all the individual videos afterwards, go to trade-ideas.com/livestream and sign up for that so you get notifications about how to watch. We also have a new series of ebooks that we launched not too long ago. Both Jamie and Steve contributed chapters to them. There's 2 chapters per book. Each book's arranged by subject. There's cloud links in there. So go to trade-ideas.com/setup and snag those. We've got a podcast, just released a new one last Friday. Probably have another one up this week. So get ready for that one by searching for Trade Ideas Podcast in your favorite app and adding us as a subscription. And then you can check out all the back issues and you're ready for the next one. Summer End, because it's now fall, gets you 15% off your first month or year of any subscription. And you can also use that to do an upgrade. So if you decide you're on standard and you want to be on premium, just plug that in, save. Any questions at all, email us, info@trade-ideas.com. That's the best place to send any of your questions because it goes into our help desk software and gets routed to the appropriate team member. You can follow us on Facebook at Trade Ideas Pro on Facebook. Jamie is QuantBot on Twitter. Steve's Today Trader. We've also got Trade Ideas. Thanks all. The recording will be up later on tonight or tomorrow, so stay tuned for that. Thanks, Jamie and Steve. Have a good one.
Yep. Thanks, everybody, for popping in. We'll see you tomorrow. Bye-bye.